Hey guys, how's it going? It's Brendan here, and today I'm going to be talking about the next financial crisis or recession that's coming to the American markets. Now, more specifically, I'm going to be looking into the stock market, the real estate market, and the precious metals market, and using those three to explain why I believe the next financial crisis could not be that far away. And in fact, I'm looking into the early 2020s as to when I believe this is actually going to happen. So if you guys are interested, go and stick around for the video, and do not forget to hit the like and subscribe button, as it does help out the channel a lot. But that being said, let's go ahead and dive on into this, because this is obviously some very important information, but also some controversial information. And I understand that some people are going to disagree, some people are going to agree, but we're going to be looking at some hard data and facts on all three of these markets, and I'm going to be explaining why all of these data together is really kind of a warning sign for me that a crash could not be that far away. Now, this is something that I've already talked about on the channel, but I haven't done a video like this in a while. Again, usually I don't do videos like this, but I want to make sure that I at least put this out there and explain why this is coming, because I am no longer in any stocks, I don't own any real estate, and I'm completely out of these markets, and I'm actually moving into the precious metals market. I'm going to be explaining why. So first things first, guys, probably the most noticeable one that a lot of you guys already know, the stock market is at all-time highs. You look at the S&P and NASDAQ and things like this. I mean, they are literally at all-time highs. This is the daily chart right now. If we move this over to the 3-day chart, you can definitely see that this guy is extremely, and I don't want to use the word overextended, because it had a great pullback over here. And again, I'm not saying that this pullback and that this recession or financial crisis is imminent. I'm not saying that it's going to happen tomorrow or even anytime this year. I'm saying that as we move into the early 2020s, get ready, because you could start seeing warning signs as early as 2020 to 2021 that the next one is going to occur sooner than you might think. I mean, but looking at this, guys, the chart in and of itself is just self-explanatory. We see the last chart over here from 2008, 2007. I mean, this is just miles above what this guy was doing over here at all-time highs. This could happen at any moment. Now, with this being said, the fact that it is at all-time highs is not a bad thing at all. It's just how long it's been since the last recession, as long as what I'm going to be, as well as really what I'm going to be showing with the precious metals market and the real estate market, because there is so many factors that go into predicting the next financial crisis. So again, first major point I want to look at is, again, it's been a long time since we've had any kind of recession. The last one being nearly, again, 12 years ago. And with us being at such an overextended all-time high, it's very possible that this thing, yanks all the way back down on S&P to 2100, or to even that, or excuse me, not 2000, or that $2,100 mark. The next thing I wanted to talk about, guys, is the real estate market and the precious metals market, because this is really where it starts to get interesting. And this, for me, was kind of the turning point as to where this is what caught my attention, is what I'm trying to say, because I was driving around. I live in a very commercial area by the beach. There's every kind of homes here. There's low income, there's mid income, and there's high income. And what I noticed is that while I'm driving through all these neighborhoods, there are houses that have been for sale for, everywhere. There's multiple houses in a row. They're all over the place, and they're growing, and none of the ones that are for sale are selling. I mean, it's gotten to the point where I can't avoid it anymore. For a while I was like, oh, look, there's a home for sale, but now there's just so many that aren't selling. And again, this is a very popular area. I mean, I don't live in this kind of nowhere town in the middle of, who knows where. It's a very commercial, area, especially for real estate. So when I'm seeing all of these homes not selling, and in fact, as I was driving to make this video, I saw a sign that says reduced price, because this house has been on the market for so long that none of them are selling. And so again, a couple of them are, but like for the most part, these houses in the real estate market are not selling. And if you look at some of these charts over here, the real estate market is nearly at all-time highs as well. Looking at the point that where it's been since 2014, and even more so since 2010 in this previous real estate crash, is at a higher or even equal to point as to where it was then. So the real estate market is just as overextended, probably not quite as overextended as the stock market. I mean, the stock market has been going, absolutely phenomenal in the last 4 or 5 years. The real estate market has been recovering really well, especially in the last 2 years here. Looking at some of these charts, and another one I wanted to show over here before we come back to this is actually the mortgage debt ratio to the household equity. And this is something that's very important to me, because when I'm looking at household equity to the debt and mortgage ratio, what this is to me is really the last time that we saw this guy overextended. Yes, it can kind of follow this trend and be overextended for a period of time, but when you see the household equity to debt ratio actually and a mortgage ratio expanding to such a far apart place, which is where it's at now, it starts to become a little bit scary. Now, Again, this is more kind of just warning signs for me as to say, hey, you might want to kind of stop, you might want to start layering out of your positions in all of these guys. Now, again, what I'm saying isn't financial, news or advising in any way. This is strictly my opinion. But when I'm seeing warning signs like this of these guys getting so far apart from each other, something that they're not supposed to be doing, I think this is actually at a record level, at least over the entirety of the 2000s course. So since the year 2000, this is at a record level of being separated. The debt to household mortgage ratio to the household equity ratio is at an extremely far apart point, which is, again, a warning sign for me to say, okay, I might want to be layering into some precious metals. Now, this is unique because precious metals, up until this year, were at extremely low prices. It wasn't till the last month, 2-3 months, that gold and silver have been rising again. And in fact, the silver to gold ratio was at, and currently is at, all-time lows. If you go and look at that over the course of history, you can simply Google it. You can see that the prices of gold and silver, and especially more so silver because of the ratio to gold, is just so underdrawn. I believe, in fact, that it's actually more costly for them to take these metals out of the ground right now than it is to actually sell them, which cannot be the case for long before the price skyrockets. Now, I'm not trying to make people FOMO in or FOMO out of here or kind of spread FUD, but what I am kind of trying to do is mix the puzzle pieces and put these puzzle pieces together from the stock market, the real estate market, and the precious metals market. So if the stock market, as we looked at, is at all-time highs, the precious metals market is at all-time lows, and the housing market is actually getting one of the largest spreads in its history towards all-time highs, is it not a time for you to at least acknowledge the fact that there could be some sort of profit-taking opportunity here? Now, the reason that I'm not in stocks, again, I don't own real estate, the reason I'm not in either of these guys right now, and I'm actually layering into silver, is a very smart one. So if precious metals are at all-time lows, and especially with silver being at the gold to silver ratio, what happens in these financial crises, and we can actually kind of go ahead and bring up the gold chart here or even the silver chart. If we go and we actually look at this, gold to the ounce, we can see that when this crash actually happened, if we can layer this guy up, what we can see is that when these pullbacks happen, the prices of gold and silver actually go up pretty substantially. So when crashes occur, the precious metal market goes up. So more specifically, when crashes occur in the real estate and in the stock market, the precious metals market moves inversely from that because of the fact that they are a tangible asset that you can hold, and the other or more online. And so I understand that stocks are more so online and that real estate is more so tangible, but it's just one of those things that when the real estate market and the stock market tend to crash, precious metals tend to go up. Another one that we can throw up here is the silver market. And that one, you can see it actually very, very well, even more so than gold, because of the fact that the gold to silver ratio, I highly advise people at least look into that. Again, not financial advice in any way, but looking at this again, 2007, 2008, this guy just started climbing by all the time. It recovered over here into 2011. Again, it just moved absolutely inverse from the stock market. Now, I understand, yes, the stock market was starting to recover in 2010, 2011 as well, but the silver ratio of how much it recovered versus stocks over this current period of time was just a very, very large win, because not only did silver not lose value, it gained a significant value. If you would have bought over the whenever this pre-2006 crash, you would have gotten silver at $6 or $7, and it went all the way up to $50. So we're talking 60, what is that, 600% on your investment. So not only did you not lose money in the crash, but you actually made 600%, which is far more than anyone makes in, the average person. If you're in an index, you're probably making 7 to 12% a year, right? You're not making 600% in that year. So the whole point of this video is to kind of just put all of these puzzle pieces together. If the stocks are at all-time highs, if they're overextended, if they haven't had a large recession in 12 years or so, the spreads on the stock market, which I actually need to actually go back to here so I can further explain that. If the spreads on the stock market are at all-time highs and at some of the largest spreads that they've ever been in its history, especially with mortgage to household equity ratios, it's one of those things where I'm not saying that it's imminent. I'm not saying that it's going to happen tomorrow. I'm just saying for the future, these are all warning signs putting one to another, one puzzle piece to another puzzle piece, that this could be happening within the next couple of years. Again, my eyesights are on the early 2020s in all honesty. I think that as early as 2020 to 2021, we could start seeing some of these warning signs go even more extreme. I mean, this really all started because I was looking around and I was noticing that houses weren't selling anymore. And for me, that's a pretty rare thing because I live in a very commercial area, as I mentioned, on the beach, and it caught my eye. And so, again, the more I noticed this, the more I noticed that more houses were coming on to sale, more houses were reducing their pricings, and, more houses weren't selling. So as I noticed this from driving around, of course, I wanted to start doing some research because with market analytics being, my major thing that I do for a living here, it's the number one thing that I wanted to at least pay attention to and look at, because of the fact that if my job is to do market analytics, I better be aware if a crash is going to occur or if that there's even a possibility for a crash to occur. So that's really the reasons right now as to why I believe that this recession is coming. Again, I think that we could still even go further on these indexes, but what I am saying more rather is to be careful from here on out. Again, what I'm saying is not financial advising in any way, just simply my opinion, but I hope you guys can understand as to why I'm very, very cautious moving into the stock market here, and why I am much more willing to kind of move into a precious metals position as a larger portfolio investment than I am into either stocks or real estate. For me, with the data that hopefully I presented to you very well, for me that just makes sense. The precious metals market is extremely undervalued at its current point. It wasn't up until the recent months that it started going up again. The ratios for them are a far better risk versus reward opportunity for me, rather than to FOMO into, let's say, the S&P 500. I know I just had that chart up over here. Because, again, for me, working into a very relatively safe market, I think precious metals is a relatively safe investment. It's not very volatile. It's held value since the entirety of time. It makes a lot more sense for me to enter into there and into those markets than at the top over here. So a lot of people are saying you need to go buy stocks, you need to go invest, you need to buy your index funds, you need to invest in the real estate. But what they're not showing you is this information. I mean, again, these spreads, everything is at such a risky position, and everyone's having this idea that you need to just have stocks and real estate crammed down your throat without being told the proper, backlying information. So hopefully this was able to shed some light on this stuff, because again, it frustrates me when I see people, Instagram gurus and everything, and again, I'm not trying to throw any shade or hate at anyone. I'm just saying, before you invest all this money into stocks and real estate and everything else, look at the underlying information. Is it a good risk versus reward ratio for you to be entering into these guys at this time? Or is it not a better idea to at least look into a precious metals investment, wait till the market corrects itself, the next major correction, whenever that may be, and then enter in when the market's low? Because not only did you not lose money, you actually gained money. And so through gaining money in a recession, you're now able to buy things at a discount. And it's one of those things that it's a leveraged position where it turns into a win-win. And if you actually catch it correctly, again, you didn't lose money, you gained money, and everything's at a discount. So you leverage yourself into a double win position if you manage to catch it. So for this reason, guys, I am completely out of stocks. I don't own any real estate. I am, flat in all of these guys. I'm not investing into REITs. If you guys don't know what that is, it's essentially a passive income form in the form of real estate investments. That's basically the easiest way to describe it. I'm not into anything else. I am looking into larger amounts and scaling into precious metals. For all the reasons that I've stated in this video. So hopefully you guys were able to find some some education out of this video. If you guys did enjoy, hit that like button, hit that subscribe button, and most importantly, guys, I want to know your guys' thoughts in the comment section below. I understand that what I discussed in this video is very controversial. A lot of people are going to agree, a lot of people are going to disagree. So let me know your guys' thoughts in the comment section below. Why could the next why could the next financial crisis happen, and why could it not happen? So thank you guys so much for watching, and I will see you guys in the next video.